The dollar itself has come under pressure in the last few months just because of the lack of progress on various policy agenda items. That's tax reform, fiscal stimulus, and really just generally trying to get the economy moving via various reform measures. And we haven't seen that because the administration's been bogged down in various issues. There's been focus on healthcare reform, which, as we know, hasn't really got anywhere. So I think there is, I think as we saw on Friday, there was a little bit of expectation that with the exit of Bannon, that we might see the agenda falling back onto the reform items, tax reform, etc.
Do you think it will?
Well, I think there's a good chance that, given, and you just mentioned the poll ratings here, it's going to be very important for the administration to really start focusing on these measures, and in particular tax reform. I think that's a key agenda item. If we can see some progress on that, markets will like that, if that is the case. Of course, it's early days, and there's various different plans. There's a congressional plan, there's an administration's plan. Both imply some big increase in the fiscal deficit, more so in the administration's plan. So I think it still could be quite difficult to get that approved.
So here's the thing, are we not sort of putting the cart before the horse? Because, I mean, in order to finance or pay for tax reform, you need healthcare reform to have gone through, and it hasn't.
Correct. I mean, I think this is the real crux of it, that all of this, at the moment, these measures that are being pushed through in terms of tax reform, the implication is, and I said, especially if you look at the administration's plans, do imply a significant widening of the fiscal deficit. Now, that's going to hark on the hawks on the Conservative Republican Party, and that could be a problem in terms of trying to push that through. So it's not obvious, and we've got the debt ceiling as well that's coming up as well in October. So all of these things are starting to come to a crux. So as I said, you're right, it's not obvious it's going to happen. It is probably going to be a new focus, and I think General Kelly is apparently now really going to try and push that into progress, given now there's a little bit more of a clean slate to go forward. But it's not a done deal by any means. And what does that mean for the dollar? Well, your initial question, at least for now, it's probably a little bit of cautiousness on the dollar continuing. But if we do see progress, it could mean some upside in the dollar.
Have you got a clear favourite in terms of your dollar trade?
Well, at the moment, most of our trades are not dollar trades. One, in the very short term,
don't trade it. That's
don't trade it. But actually, saying that, we do in the very near term, we would like to go short euro versus dollar. We do see a little bit of upside risk on the dollar in the near term. And in fact, with the euro itself, we do think it's gone a long way. It's passed through Fibonacci resistance levels. It's actually at pretty critical technical levels at the moment. And if we do see a little bit more downside momentum, for instance, if Draghi disappoints and doesn't come out with anything particularly hawkish or less dovish at Jackson Hole, that could also spell more bad news for Europe.